Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, September the 26th, the year's 2019. Let's talk trading. Why you need indicators, part 4. Let's just dive right into it, okay? One of the reasons to have indicators is because they focus your attention. It's so easy to get distracted. So there was an indicator I wrote, let's see, back in 2010. I called it herd mentality. And the reason I called it herd mentality because these are the things that the herd likes to watch. So if you want to be like the herd or focus on the herd, know what the herd's doing, you could have this indicator that tells you basically in English what the herd's looking at. And you can see here it updates in real time. And right here, the H1 closed just crossed below the pivot. And then you see it just went back up. We've got RSI 14s oversold here. And we've got the AC giving a sell signal. So that's one of the reasons. And then another reason is because it can tell you or remind you and help you prevent mistakes. So for example here, we've got the H1. In this case is, we show it's a bear, and it's telling us, don't be an idiot, only trade short. So if for some reason you were thinking about going long, you've got this reminder up here. Now, if you hit the Alt-T button, you get this little box comes up. I actually wrote an indicator where it took over. So right here, if you were supposed to wait, it would take that box off the screen. And if you tried to put it back on, the indicator, if it was running, would just reset it. So it basically prevents you from making a mistake. In other words, if you say, I'm going to wait until a certain condition, well, the indicator won't let you have that trade box on the screen. Of course, there's ways around it, but sometimes it's best if you prevent yourself from being yourself. So, big 3, prevent mistakes. Oh, and just in case you're wondering here, this was 2018. I call it trade reminder. So, indicators can prevent mistakes, they can focus your attention, and they can remind you. So those are just 3 more reasons to have indicators. Okay. Now, of course, even with all the indicators in the world, if you don't have your risk and money management in place, you're doomed. And once again, we're defining risk simply as the dollar amount or the percent of your account that you're willing to lose per trade. So if it's $10 a trade, if it's 1% of your account, that's what you're willing to lose. So you have your position size and stop loss set accordingly. Okay, let's look at the charts here. We still have 1, 2, 3, 4 pairs that haven't filled the gap. You can see here we've got the euro up. It made a strong bounce out of the weekly rat zone, which is 20 pips. And actually, so the weekly and the daily is the same when it's making the weekly low. But you can see here, just looking how it made a lower low, but then came back up, crossed through those wicks. That might have been a place to jump in. And the thing about it is, you go, but it could go lower. Well, that's why you have a stop loss. If it looks like it might be a good place to go long, you jump in. But you put your stop loss down here. So what's the worst thing that can happen? You lose the amount you're willing to lose per trade. But let's just say you got in at the last moment on the rat zone, you'd be up 20 pips. Now, of course, somebody's going to call Harry hindsight, but let them. I don't care. But just remember, boys and girls, fellow traders, that I guess boys and girls are it's no longer politically correct. I think you'd have to list off 20 some, but let me forget that noise. Just remember, fellow traders, that these videos are for educational purposes only. They're not investment advice, and your results may differ from mine. And trading's really risky, very, very risky. You could lose all your money. So if you need trading advice, seek it from an accredited financial professional. That way, when you lose your money, you know it was lost by an accredited financial professional rather than by some guy or gal you heard on YouTube or some trading forum. The buy zone. Here you had the pivot above the buy zone, so strong indication to take that trade, and it almost hit it. Hopefully you were smart here. You see a lower low, and then price went down. So you should have taken your money here. And then there was a trigger here short. Then you see trigger long, hit the pivot. So once again, you had another opportunity. And that just reminded me of something. So I'm going to hit the pause button. Okay, I'm back. I paused it. I don't know if I told you, but since we're talking about indicators, I'll give you a little sneak preview. I've been working on an indicator. I bet that doesn't surprise you much. The indicator is higher high, lower close, lower low, higher close. And of course, I had to do a multimeter based on it. And so what this indicator does is if it has a higher high but a lower close, it basically paints a red line there. And if it has a lower low but higher close, it paints a blue line. And so what I was thinking at the time is you could probably trade this in the rat zones and the wick zones, because you see here price made a higher high, and then it came down, made a lower low. I'm sorry, came down and had a lower close, painted the red line, and so then this says, okay, let's go short. And see here, it painted the blue line, it says, let's go long. But what I was thinking is, since this blue line was closer to a high than it was closer to a low, to basically ignore it in trading. But looking here at a low, see this price here was near that low, and it was like, hey, there might be some money to be made, especially scalping. So this is an indicator that rather than me having to think, okay, where is it? The indicator shows me. So I can use this indicator and just stare at the chart and maybe get some insight that I wouldn't get if it were just a blank chart. Now you see here, the monthly is showing. So right here, it put in a lower low, but crossed above that close. So that could have been a trigger to go long. And that's what I'm looking for. I don't know. I might even have to write a frequency distribution to see what it pays off. But here you see on the weekly, you had that same formation. And what this does, this would really cut down on your entries, because you might have been tempted to enter on any one of these, but see here, you need this clear indication. Now, one of the things is it has to put in a lower low, in this case, to go long. So there might be a formation where it's like a 1, 2, 3, like right here. See, 1, 2, 3. But since it didn't put in a lower low, on this candle you wouldn't go long. But on this one, you would. So once again, using these indicators can help you see the trades and pick the trades. Now, in fact, the trader asked me about doing something about swing trades. This might be something that you're looking for there, fellow trader, for those long term. So on a weekly basis, or possibly, even look here at a daily basis. So right here, once again, this is an indication. See, it didn't put in a lower low, so it didn't get painted. But right here, what is this, boys and girls? This is a turn trade. A bear candle at the bottom, making a bottom, followed by a bull candle. Price is turned, and it is turned up, and it went up for what? 1, 2, 3, 4, 5, 6, 7, 8, 9 days or so. And what do we have here? We also have a turn trade. It put in a high, then you see another turn trade here, and then it turned down. So does it work all the time? No. That's why you have stop losses, right? Okay, so back to our regularly scheduled program here. Okay, only 4 pairs over 100 today. You can see, why am I showing the euro? Well, let's just stick with it. You see it broke out of the previous day's low, good for about, 15 pips if you nailed it. And then it came back up through that wick zone right here. So once again, there was profit to be made trading the wick zone. And here we have the Einstein lines. You can see right here, price is kind of waffling here, not making any moves of any significance. Here we have another down move. So with the Einstein line, you see here, it's up in the highs. So chances are, based on what happened before, you might think, let's not do the longs here. Let's only look at the shorts. Price action, 2 ball at the top, red at the line, 3 ball at the bottom, green at the line. I mean, this stuff happens every day, and that's why I have to laugh when people talk about Harry hindsight. It's just like, no, we do this each and every day. And the indicator here, oh, this is that dreaded 3-level ZZ indicator that repaints. No, it doesn't repaint. It moves in real time. And as I mentioned, you can see right here, you can have an indicator telling you, do not buy. This is idiot mode. If you buy when this is up there, you're an idiot. It's just that simple. And the ATR, and we're looking at a different pair. I can't even remember the last time I showed the euro, the last month. I mean, it's been a long time. Usually don't even think about trading the euro anymore. But you can see here how using the ATR, here's a pair I don't trade, how it hit the weekly open. It actually made it to the ATR right here, back up to that ATR minus. No, that's a plus sign, isn't it? Hard to see. Yeah, that's a plus sign. No, that has to be a minus sign, because there's the weekly plus right there. So you see it pulled back, went down, pulled back to that ATR minus 2, but here's the daily open plus, so it almost made it to that daily open, half that ATR distance. And let's see, we've seen that indicator before, and the frequency distribution here, showing right here in the red green rat zone. So fellow traders, indicators, they can prevent mistakes, they can focus your attention, and they can remind you. And what they can remind you is it's not what you trade, it's how you trade it. So go out there and drain the banks and hit the subscribe button. Don't forget.